One more change, they disallowed some expenses. Normally we claim some expenses against income. In case of dividend, we can claim wherever we have borrowed and invested in shares, the dividend income, against dividend income we will be able to claim interest on those borrowings. But that is not allowed now, that is taken away. No interest expenses will be allowed against dividend from shares or units from mutual fund. Fourth one, 195, section 195. Previously it was in the old act, we know 115 BBE that talks about 68, 69A, 69B, C, D, that is unexplained investment, unexplained credit, unexplained assets, expenditure and all. For those, previously it was taxable at 60% rate under 115 BBE in old act. Now in the new act also it continued to be 60 as far as the original act. Now they amended, they made it to tax at 30%. In section 195, the tax rate is reduced to from 60 to 30. This is the income part. Next one, 263, talks about filing of returns. So wherever persons having business income without subjected to audit, that is small businessmen, they can file their return up to August 31st instead of July 31st. They extended the due date from July to 31st August, 1 month. So that is first one. The second one is revised return, filing of revised return. Now they extended another 3 months in case of filing revised return. Previously it was till the end of 9 months from the end of the financial year. Now they extended to 12 months from the end of the financial year, that is tax year. So in case of revised return, we can file even after 9 months, that is before end of 12 months. Within the next year we can file. Third one is filing of updated return. In case of updated return, they allowed even filing loss return also. Previously it was not allowed, only income return we can file, because only income in the updated, in case of updated return we are allowed to offer more income. Loss return was not allowed. Now they allow loss return also, provided it has an effect of reducing the loss originally claimed. Indirectly it is beneficial to the revenue, because we filed some loss originally, now we are reducing the loss. So which is as if now we are adding some income. So that is now allowed now. Previously it was not allowed, now it is allowed under 263. Again, in case of updated return, one more change. See, previously it was not allowed whenever we are issued with notices for reassessment under section 148 previously, now it under 280. So now in case of 280 notice, even we receive notice also, that is proceedings have been initiated by the department. In spite of that, we can file the updated return provided we pay some additional tax. Normally updated return also we have to pay additional tax. Along with that, one more tax, another 10% we have to pay. So with that additional 10% tax, we can file updated return even we received notice for reassessment proceedings. That will save us from levying penalty.